Zakat and taxation might look the same since both serve as mechanism for wealth redistribution and social welfare. But actually, they differ in purpose and how they are managed. Zakat is a religious duty, one of the 5 pillars of Islam, with the purpose of purifying wealth, helping the poor and needy, and also promoting fairness in the Muslim community. While the taxation, on the other hand, is a legal obligation under the state to fund public goods, services, infrastructure, and national development. In Malaysia, zakat is managed by state Islamic religious councils in line with Sharia, while taxation is governed by the federal government through the Income Tax Act 1967. Interestingly, Malaysia is one of the few countries that has institutionalized zakat collection. Thus, this study focuses on Malacca, exploring zakat and taxation for individual and corporations, comparing their implementation, identifying challenges, and also recommendations for their better financial governance and social welfare.
Firstly, I will talk about zakat requirements for individuals. In Malacca, zakat is managed by the Majlis Agama Islam Malacca or MAIM. Every Muslim who fulfills the condition of nisab and haul is required to pay. The main types of zakat include zakat al-fitr, which is obligatory during Ramadan and is generally around 7 ringgit per person. Meanwhile, zakat on income, saving, investment and business profit is calculated at 2.5% once the nisab is reached. For this year, the nisab is 29,740 ringgit and 70 cents based on the value of 85 grams of gold. To encourage compliance, MAIMs provide convenience channels such as salary deductions, the e-zakat portal, online banking and payment counters. Next, I will talk about current practices of zakat payments. In terms of current practices, many individuals rely on salary deduction scheme for automatic monthly contributions. Others prefer the e-zakat system for online calculation and payment, while counters and mosques, mobile agent and partner banks provide further options. From a taxation perspective, Section 6A Bracket 3 of the Income Tax Act 1967 allows zakat paid to MAIM to be claimed as a tax rebate. This rebate directly reduces tax payable. For example, if a person owes 2,000 ringgit in income tax but has already paid 1,500 ringgit in zakat, the final liability is only 500 ringgit. This mechanism ensures that Muslims are not burdened with paying both zakat and tax in full. Lastly, I will talk about challenges faced by individuals in fulfilling zakat and tax obligation. Despite this system, challenges remain. Many individuals are still unsure about calculating zakat correctly for income, saving or business, leading to underpayment. There is also a perception of a double burden as some feel zakat and tax reduce disposable income, especially for lower earners. Finally, weak documentation and missing receipts often prevent taxpayers from claiming their full rebates. So, in conclusion, zakat and tax in Malacca are closely integrated under the management of MAIM, with convenient payment channels and tax rebate provision that reduce the burden on taxpayer. However, greater awareness, improved accuracy in calculation, and stronger record keeping are still needed to ensure the system functions more effectively and benefits the community as intended.
Now, I will explain about zakat and tax for corporations. In Malacca, corporations owned by Muslims are obligated to pay zakat on their business income, known as zakat perniagaan. This is managed by the Pusat Zakat Malacca, which operates under MAIM. To be eligible, the corporation must be Muslim-owned, operates and generates wealth from halal sources, holds assets for at least 1 year, and meets the nisab threshold, which is currently set at the value of 85 grams of gold. Zakat is usually calculated using one of two methods, either the net working capital method or the growth model. For partially Muslim-owned companies, the zakat is adjusted according to the Muslim equity percentage. Moreover, the Malaysian government recognizes zakat payments by corporations as a tax incentive. Under Section 4411A of the Income Tax Act, zakat paid can be deducted up to 2.5% of a company's aggregate income, which helps prevent double taxation. In addition, companies may calculate zakat internally or seek guidance from BZM. Compliance has been increasing, not only among large corporations but also small and medium enterprises. For example, in 2022, Lembaga Juruukur Tanah Malaysia paid 1 million ringgit in zakat, while Bank Simpanan Nasional contributed over 762 ringgit. Finally, beyond fulfilling religious obligations, zakat also serves as a form of Islamic corporate social responsibility or ISR. In Melaka, corporate zakat funds are often directed toward education programs, healthcare support for Asnaf families, and initiatives such as microfinancing and entrepreneurship programs. Some companies even incorporate zakat payments into their sustainability or ESG reporting, which not only strengthens their reputation but also enhances stakeholder relationships and contributes to the socio-economic development in Melaka.
Next, I will compare zakat in Melaka and the tax system for individuals and for corporation. Let's begin by focusing on individual. Firstly, eligibility. Zakat is a religious duty for Muslims whose wealth exceed the nisab, while tax is a civil duty and all Malaysian residents whose earning is above a certain amount. Moreover, the payment method zakat offer flexible option, while tax is primarily managed through mandatory system like the monthly tax deduction or PCB for employees. Finally, in terms of benefits, zakat helps purify one's wealth and directly support the needy in Melaka. Another benefit is that zakat payment can be used as a tax rebate, lowering tax payable. On the other hand, tax payment give benefits by funding essential government services and national development. In Melaka, whose zakatable assets are above the nisab threshold, whereas the corporate tax is mandatory for all companies in Malaysia based on their net profit, regardless of ownership or religion. The payment of corporate zakat is made through Pusat Zakat Melaka through various channels like counters and online platform, while corporate taxes are paid to LHDN through multiple methods like e-filing. Lastly, the benefits of paying corporate zakat is an excellent form of corporate social responsibility that assists local community and also allows tax deduction. In contrast, paying corporate tax is essential for funding national development and ensure the company avoids legal issue and maintains a good reputation. The implication of zakat and tax, not just as payments but as religious and a governmental obligation. First, the legal authority. Zakat is a divine obligation managed by Maim and Pusat Zakat Melaka. Failure to pay is a religious neglect. Tax, on the other hand, is a legal obligation enforced by LHDN, where non-compliance can result in civil legal action. Next is motivation. Paying zakat is considered an act of worship, providing spiritual and moral benefits, while paying taxes is a good civic act that funds public services and it lacks the spiritual reward of zakat. Lastly is enforcement. Zakat relies on the individual's religious conscience and awareness, as enforcement is less strict. In contrast, tax is strictly enforced with audits, penalty and legal action. This highlights how both systems achieve compliance through very different means. Next, the integration of zakat and the tax system. The first one is the tax rebate system. When Muslims in Melaka pay their zakat, they can claim a tax rebate. This is a big deal because it means they don't have to pay twice on the same income or wealth. Not only that, this integration is formally acknowledged by the Inland Revenue Board or LHDN. Secondly, while they are integrated, their administration are still separate but complementary. Zakat is managed by the Islamic Religious Council of Melaka, while tax is managed by the Federal LHDN. Lastly is corporate accounting and reporting and good governance. The key to making this work is good governance. Pusat Zakat Melaka ensures they provide proper documentation, which is crucial for individuals or corporations to successfully claim their tax rebates. This shows that religious and civil obligations can work together in a harmonious way.
Let's look at the main challenges in complying with zakat and tax obligations in Melaka. First, administrative limitation and uncertainty in regulations. For individuals in Melaka, there's uncertainty about whether zakat payments are deductible for income tax and confusion about the procedures involved. For businesses, additional reporting complexity and risk arise when complying with different institutions. This is because businesses rely on official receipt and reliable governance to access communication to financial statements. Overall, weak legal frameworks, bureaucratic overlap and lack of coordination in Melaka make compliance harder for everyone. While it is not Melaka specific, a regional study and Sultan Tapadan Indonesia still serve as a great illustration of real cases. Second, public trust and institutional credibility. Many individuals in Melaka prefer giving zakat directly to recipients rather than through agencies because they worry about transparency. For businesses, low credibility of local zakat institutions like MAIM and PZM complicates their decision to pay zakat formally while also fulfilling tax obligations. Finally, emerging complexities with digital assets. Individuals in Melaka may struggle to decide when to sell volatile assets like cryptocurrencies to calculate zakat. For businesses, unclear local regulations, cybersecurity risks and weak guidelines create challenges for those trading and storing digital assets.
Thank you, Najihah. Now I will give some recommendation to address the challenges. First, it is really important to coordinate zakat and tax system. Right now, zakat can be claimed as a tax rebate, but since it is managed by State Religious Council while tax are handled by the RIB, many people are confused about the claim process. By linking these two systems, zakat payment could be recorded automatically, making it much easier for both individuals and companies to settle their zakat and tax at the same time. Second, zakat institutions need to improve their transparency and credibility. Many people still prefer giving zakat directly to recipients because they are unsure about how it is managed. By publishing annual reports, carrying out independent audit, and sharing distribution data openly, this institution can build trust and encourage more people to give zakat through official channels. Finally, clear guidelines for digital assets like cryptocurrency are needed. PPZ Mawib already accept zakat in cryptocurrency, but authorities like Bank Negara and National Zakat Board can provide standardized guidelines. This will make the process more consistent, give payer greater certainty and help modernize zakat collection. Next, I would like to highlight the potential reforms in zakat policy. First, the government could offer incentive to encourage companies to pay zakat through official channels, like reducing tax penalties or giving public recognition. For example, said companies that paid over 4 million through the Selangor Zakat Board will publicly recognized, which not only boosted their image but also motivate others to give zakat officially. So, if the government provides this incentive, more companies will be encouraged to pay zakat through official channels.
Second, recognizing zakat as a tax credit, not just a deduction. Currently, zakat is often treated as a deduction from taxable income. Treating it as a tax credit would directly reduce the tax owed, so businesses and individuals don't feel like they're paying twice. This approach also gives taxpayers greater sense of purpose of their zakat donations.
Third, having standardized reporting and a digital platform can make compliance much easier. If zakat and tax information are combined in one system, people can track their obligation more easily. PPZ Mawib's digital asset zakat channel is a great example of how technology can make zakat management more modern, transparent and convenient.
Last one, better system integration for zakat collection. Stronger cooperation between tax authorities and zakat institutions, along with aligned governance structures, can reduce inconsistencies and prevent overlaps. This ensures both systems work together efficiently, improving compliance and the long-term sustainability of zakat and tax policies.
In conclusion, although zakat and taxation differ in their underlying purpose and governance, both remain fundamental mechanisms for achieving equitable wealth distribution. Specifically, the analysis of Melaka demonstrates how this system functions in parallel as zakat for Muslims and taxation for all citizens. Therefore, moving forward, the key is to improve and strengthening their alignment and overcome existing challenges, particularly for individuals and corporations. By doing so, zakat and taxation can continue to serve as complementary instruments in enhancing financial governance and fostering more sustainable for society.